we did have a wild move here on Friday, and I'm just going to cut through all of this. I want to get right to it. You asked me how my weekend was really good. We saw a move back in the futures market as Trump kind of threw some cold water on some of the scares that got the market down on Friday. With the wild day on Friday, first of all, what do you make of it? What do you make of Trump's weekend post? And perhaps most importantly, where do we go from here?
So the most interesting thing that I kind of thought about coming out of this, from the volatility we saw on Friday compared to today, and compared to last time the tariff situation, kind of tariff tiff, I'll call it, back in March and April, the biggest difference is that inflation expectations actually went down this time on Friday. You saw long duration treasuries rocket higher, like
Yep.
1.6% on TLT. You saw the 10-year bond go up, yields go down. Last time, if you remember back in March and April, yeah, the risk off trade happened, but inflation expectations actually went up on the tariffs, kind of like you were talking about the automobile side of the equation right before we got on, right? So it looks like the market was trying to digest and kind of allude to that tariffs might no longer be inflationary if we kind of get that going forward. It's going to be more of an economic slowdown, is kind of what the market's saying. Now, what you kind of alluded to also was the tweet over the weekend. And I think the biggest thing that we can kind of realize about this administration, because the fact that we sold off so quickly back in March and April, and then it kind of all kind of got figured out, and all the investors kind of came back in, bought the market. It looks like any pull down is going to be short-lived, probably in the foreseeable future. So I think a lot of this is a buying opportunity. Liquidity remains strong. Whether inflation expectations went up a little bit on Friday, they're coming back down today. We look at three things at LFG. We look at liquidity, growth, and inflation. Growth remains pretty strong. Inflation expectations have come down a lot over the past year or two. And then you take a look at liquidity is extremely strong. So we actually at LFG about a month ago, and they've been rocking in our portfolios.
Mhm.
We are thinking about maybe selling maybe in the next month or two, depending on market conditions. But we bought ASTS, which is AST Space Mobile. We bought it
Yeah.
around 40. It's at 87. I wish I was on your show a month ago. I talked about it on a couple other shows. GitLab we bought, which is actually down from our cost basis of where we bought it from. So I still think that's a phenomenal buy. And then you take a look at another area like Bullish, BLSH, which is up a little bit from where we bought it. But we bought those three really kind of like really unique, kind of fun names that are newish, kind of even to the market in some sort of capacities. But the liquidity remaining strong should be very bullish for some of those higher tech growth areas. But you have to be very kind of careful with where you pick. You just don't want to throw money at the wall anywhere. But we think those three stocks are good enough with a balance sheet perspective and demand perspective in the market to really benefit from the liquidity remaining strong. But again, ASTS is up 130% since when we bought it. So I'm not recommending new buyers maybe put money into it, although it would help the short squeeze going on with 25% short.
Yeah, no, that was a great call. Actually, the last time that we were on here, we did speak about space as a theme. I believe we also talked about Rocket Lab, which has been doing phenomenal since we spoke last. You've made a lot of great calls. You and your firm have made a lot of great calls here. You mentioned some of them there: Bullish, Circle, GitLab, ASTS. A lot of them have ripped now. For the ones that have sold back here, you just talked a little bit about, we kind of feel like we're in buy the dip mode here. Some of these names that maybe have made some of these outsized moves and come back in, is it okay to maybe add back to those maybe for another trade, or are you just kind of putting it on the back burner until we kind of reset?
Great question. As long as liquidity remains strong, and I don't see any kind of environment where it doesn't continue to remain strong with all the deficit spending, with the pathway of interest rates going lower, coming on the horizon. So you take a look at both of those factors. As long as liquidity remains strong, pullbacks in a lot of those areas remain, again, viable. So Circle, I think, is still a really good spot to add. GitLab, again, a really good spot to add. We actually, on our portfolios, the way we treat ours, is we actually have kind of a bifurcated portfolio, just kind of like we feels like we have a bifurcated almost economy, right? Where
Mm-hmm.
the middle class is getting squeezed. Those that own assets are doing very well. Stock market near all-time highs, real estate at all-time highs, all that fun stuff. So we like to kind of bifurcate our portfolio. And what I mean by that is, I would say about 80 to 90% of our portfolio is what we call, growth at a reasonable price. Like very quality, good balance sheet, not a lot of debt, not a lot of high growth stocks. But the 10 to 15% that we add, like the Circle, Bullish, ASTS, that are, high beta stocks are trading back and forth, maybe 10% each day, like we saw yesterday with a lot of those stocks down 10%. Some of those up 10 to 15% earlier last week before the sell off on Friday. Those like 15% weightings can actually really round out your portfolio without taking on an extreme amount of risk, right? So you can actually deliver alpha while remaining pretty quality and balance sheet focus on the other 85%. So utilities, I think last time about utilities on your show,
Yep.
if I'm not mistaken. I didn't rewatch the show about a month and a half ago we were on. But utilities, even though it's not, a fun area to talk about, utilities are still up, I don't know, 15, I think, percent this year or something, and it pumps off a 4 or 5% yield. Like, I think utilities still remain to be a good spot. You're taking a look at even the simple stocks like Kraft Heinz we bought, like, which is something that, again, a lot of people wouldn't think about, but with that Warren Buffett mindset of, I think he's upset with them divesting from and splitting up the company again. We bought it after that news came out just because we think there's a lot of quality there, and it pumps off a good dividend, and it's got a call option on dividends going lower. So our overall yield on our portfolio right now, just to show you how quality focused it is, outside of the 15% I'm kind of mentioning there, is about 4%. So we own a lot of those high quality dividend paying names that aren't necessarily fun always to talk about, but they've been actually performing pretty well.
Yeah, indeed. And really quickly here, we do that work here for you. You're not going to be forced to remember that. The last time we had you on, we did speak about those utilities. We also spoke about TLT. We spoke about energy. We spoke about EWY on the weak dollar. We also spoke about some defense stocks. You had talked a lot about there being some macro uncertainty. Obviously, it looks like we have one of these wars over now, but there's still some uncertainty out there. Europe has shown more of a propensity to kind of add to their own defense. So I think that that's still in play here. One more thing that I wanted to ask you regarding the space theme, because that's been a popular one, not only for guests that we've had on, but our group as well. We talked a lot about Rocket. We talked a lot about ASTS. Do you have a long-term view on the industry? Are you looking for more space-based plays? Do you think there's some more runway on this? I know, putting ASTS and Rocket Lab aside, is there any more that you're looking at? And then do you have any view on any of those topics we previously discussed, like TLT, Korea, or defense?
Yeah. I want to be completely clear here, just so I'm not like, saying something to the viewers and trying to get them all excited about space just because I'm talking about it. I want to be clear that I'm referencing the higher tech growth names in the portfolio that we're looking to add purely because of liquidity, and frankly, these are trades. So we do probably plan on being out of these probably in the next couple of months. So space, yes, it's very interesting. Like, I'm a nerd. I'm a Star Wars
Me too.
nerd, Star Trek. Like, I've watched all of that. My dad forced me, like, at 6 years old, to watch all of the Star tracks from like the 1970s. So look, I love space. I love the final frontier. It'd be awesome to be in a spaceship one day, but there has to be so much more innovation in that area, so much more capital flowing into that area. With interest rates coming lower, that should benefit a lot of those higher growth areas. You could take a look at some of the virgin areas. You could take a look at some of the other kind of ancillary areas of space. But when it comes to that kind of side of the equation, if we get any kind of recession or any kind of negative downturn in the next 5 to 10 years, which I would say there's going to be some slowdown in the next 5 to 10 years, you don't want to probably be a straight long-term investor just because of the capital needs of that industry, unless you're Elon Musk and you can go fundraise billions and billions of dollars because you are known to be a winner that never loses. So I would not be in that high growth. I have no idea what's happening with my camera, by the way. It's like this is really weird. Anyway,
it's like a psychedelic light show or something like that.
I know. I must have the right to be in the spot by the window.
There you go.
Like that. But yeah, I would not be a long-term investor. I would be looking to be more in a trade in that kind of space.
Okay, that's really helpful, and I'm glad we were separating that. I'll tell you what, it's made for a great trading environment recently, so that makes a lot of sense. Okay, you talked a little bit about buy the dip there, that kind of mentality, and I just want to expand on that a little bit. First of all, and this is something that I'm kind of looking at, does it feel to you like for this recent rally or some of these recent moves up that there are still some reluctant investors on the sideline? And if you're looking for a buy the dip opportunity, do you think any of those reluctant investors end up buying the dip with you and maybe carry this to a new level, the market to a new
I
level.
think that's very possible, and that's been one of the biggest bull theses kind of on the out there. Is like how many trillions of dollars
Sure.
is in money market accounts, and I have two different philosophies here. Scared money usually remains pretty scared. There's a ton of FOMO going on right now, which is why the saying and the mentality that stock markets at all-time highs continue to hit all-time highs more than stock markets near bottoms, because there's a reason why it's at all-time highs compared to when it's at bottoms or near or going lower and hitting new lows. You want to buy the market more at all-time highs than you do at new lows. So, or stocks even at all-time highs compared to new lows. So, I think that money will come out as we kind of that FOMO continues to increase.
Mm.
But I do believe that a lot of that money is going to remain parked there, because if you were in cash 2 years ago, why would you buy the market at 100% higher? Even though there is that FOMO kind of going on, it kind of would be almost a psychological barrier saying, okay, well, now I'm afraid to miss out on the last 100% 2 years ago. Now I'm afraid there's going to be a 50% correction. I'll just get back in when it sells off. That kind of mentality usually does not change as I talk to people in this industry, right? So is that a bull thesis? Absolutely. Is it
Mm-hmm.
the only bull thesis you should use as an investment theme? I think it's actually the opposite side that you should actually pay attention to more. The fact that no one's selling the market, really. I mean, Friday, yes, but overall, it feels like investors are holding assets. And as long as that money doesn't have to come out of money market accounts for the market to continue to higher. We just need people to not get scared and nervous. And it does feel like there is a sense of nervousness in this market with quick reactions like we saw on Friday, and then we saw gains over the weekend. We'll see how we open today. But what I would say is you want to be quick and nimble as a trader. You want to probably use covered calls in a lot of ways for a lot of the stocks that you might own in your portfolios. And then you also want to be you do want to own maybe some bonds. Like we talked about TLT, which I was probably early on in some ways. With interest rates going lower, you do want TLT to be a small portion of your portfolio, I believe, because it's a call option on any kind of hedge on any kind of sell off, and a call option on rates going lower.
Okay, so the last time, I mean, you talked about the market selling off there on Friday. We crashed all the way down to the 50-day moving average. The last time that we were at the 50-day moving average, the market proceeded to run 21.5% from that area. So, well taken there. All right, just kind of looking ahead here, do you anticipate a strong Q4 and holiday season this year? And if so, what are some of the things you're looking at for the rest of 2025? And if nothing really fits that criteria, what are you looking for in early 2026?
Great question. Yeah, I think things are going to remain pretty strong. I think consumers still are spending money. Job market still remains pretty strong. And then you take a look at AI. We haven't really seen true AI replacement of the workforce, and I think that will come. I think that's probably a 2026, mid 2026, late 2026, maybe even early 2027 story. So I am concerned about that because it is a kind of debt snowball as people get
Mhm.
unemployed or get laid off. They stop spending money, and then snowballs. They start defaulting on debt, and with things, houses and car loans and credit card delinquencies starting to tick up, bankruptcies starting to tick up a little bit. That does concern me, but I don't think there's an immediate need. A lot of companies don't really fire, I don't think, into the holiday season. It's a bad look for their employees that want to buy
Indeed.
gifts for their children. I think they wait for the new year. So I think we'll continue to be okay around that over the next couple months from a job market perspective. But I think you want to start looking at again, the ancillary AI stories. Accenture, another stock that has been extremely unloved. I think it's down like 40% or something from the highs about a couple years back, maybe a year and a half, 2 years back. I think that stock continues to be an interesting area if it gets loved, if the CEO can execute. They don't execute, they haven't executed. So we just added to that stock on some downward pressure there. But I want to play the ancillary AI stories. I would maybe start thinking about some of the discretionary areas, but I would not stay too long in some of the discretionary
Okay.
areas if we do get some bullish trends in that. But again, right now we are rounding out our portfolios with basically those four tech stocks that have added alpha, kept us kind of ahead of the market in a lot of ways, while the other 85% or so protects us, like the Kraft Heinz, like the Bristol Myers, like some of the again, sexy names.
Okay. Luke Lloyd, Lloyd Financial Group, or LFG for short, one of my favorites. Luke, really appreciate it. Any want to plug Lloyd Financial Group at all before we take off for the
I,
day here?
look, guys. I mean, look, I'm a real person. I think a lot of this industry is stuck with a lot of, trust out Wall Street sometimes, and I'm just trying to bring that Main Street to Wall Street because look, I'm from small town Martins Ferry, Ohio. Coal mines, steel mills went out of business my entire life. Maybe nuclear energy could be coming back in the area. That's one area we did not talk about. I'd still would be playing a lot of those areas, but you can contact me at lloydfg.com.
Okay, amazing. We'll have to bring you back and talk about that. As someone that also tries to kind of bridge the gap here between Main Street and Wall Street, I really appreciate it. Luke, really good stuff here this morning. Have a great rest of your week. We'll catch up with you soon, all right?
Thanks, brother.